Alright, so hello, welcome to this week's overview or roundup essentially. So we're going to be going through the price action of Monday all the way to Friday. Okay, so before we begin, for those of you who are just new to the channel, I want to say welcome. There's a lot of resources for you on the channel for free. So utilize them, but also hey, just hit the like button, right? Just hit the like button as a way of supporting the channel, and also subscribe. If you like the content, so that I'll be able to share more with you on this. So to get started, let's take out some of the drawings we have here on the screen. So let's do this. So this is so the entirety. This is week 7. Amazing. 2024 is already quickly going by. So week 7 already. Week 7 live. So that's that. I'm gonna take off everything. Yeah, good to go. So just a second. So the last weekly overview here was week 6. Yes, correct. So week 6, right? Yeah. Okay. Anyways, so that is it. So we've taken out everything. So as usual, we will start with the 4 hour and then we go down to the 50 minutes. But just before we get into that, of course, you can see here on the Discord channel that all through the week, I shared forecasts for both London and also New York session. So the week started. I'm doing this on a Saturday, so today's the 17th. So the week, and of course Friday was 16th. So the week started on the 12th. Yes. So you can see this was a forecast for the 12th. That's Monday, Tuesday, Wednesday, Thursday, and then Friday. So all the week, everything is literally here. So if of course you're part of the VIP membership, you already have access to this. But for those of you who are not part of the VIP membership, I encourage you to utilize, the 10% off that we have going on. So stock in profit, and then you get 10% off of this for the monthly, quarter or yearly. It's really going to be beneficial to you. So that said, let's just get back to the chart. So we start from the 4 hour. So on the 4 hour, we have here, so you can see clearly on the 4 hour, we have a bearish trending market, right? Without even drawing anything, you should be able to tell that this is basically the market selling off, right? So we have a bearish trending market, so it's a super clear. We know that is the case. Now, we do have a few things, of course, that we need to be able to put in place for us to accurately interpret the market and then utilize the information for profit. Now, to do that, we need to take this back, the candle replay back to Monday. Where's the 16th was today, so Monday should be Monday 3 a.m. Perfect. Let's take that there. So Monday 3 a.m. So we're actually we're here, right? So this is actually Sunday 11 p.m. Sunday market open. So we have this. So we need to identify the structure in the 4 hour. So what we need to do now, you can decide to go back in time to look at this structure. But for me, I'm just satisfied with focusing on the 4 hour and then the 50 minutes, and then once in a while look at the high time frame, maybe the daily, if for example I want to swing a trade, right? So, but that is that. So for now, let's just focus on the immediate structure we have going on here. So here I'm going to take this. I'm going to draw from this to this, and that's a breaker structure, the 4R, and then this too. We've got this, and then yeah, our next target is definitely going to be here, right? So simply following the market structure and also following other flow. So there we go. We mark this. This was the highest point of this candle. Got me together right there. And then we also have this supply zone that is still unmitigated. So we have that. Right. So yeah. So what else? I think that's that. So this was the last supply zone that took out this low and gave us the gave us a new low. So essentially we're expecting that because the market is trending bearish, this low effectively should go. But when is that going to happen? That is the question of, that's the question we're going to ask the chart, and we're going to see exactly how we trade that. Okay, so with this, we're super clear on the 4 hour what the market is doing. We also need to draw here just an additional tool here, so we know that this is the range we're working with. So this is the low and this is the high of the 4 hour range. So essentially, when the market is pulling back this way, we know that the major trend of the market is not bullish. We know it is bearish. So we're not anticipating that the market may pull all the way to the supply zone. Sometimes it may pull all the way back, like we have in this case here, where the market pulled all the way back to mitigate the supply zone. A number of times, or a lot of times, the market may not necessarily pull back all the way here, and we may get that continuation. And a few things, play into that. Okay, from fundamentals, majorly fundamentals, because if you have high impact news like NFP, FOMC, CPI, and all of those things, they would, if they will effectively, fuel the movement in the market, right? So sometimes you have the cliche of buy the rumor, sell the price, and a lot of times will play out. So you may see the market buying and buying and buying ahead of a news item coming out, and then when the news item comes out, you see a dip, something like that. So, but that's essentially, by the way. So now on the 4 hour, we're clear what our structure is. No ambiguity there. Let's go to 15 minutes. So on the 15 minutes, we also have to identify, our structure and also draw our zones. So on the 15 minutes here, so this is essentially the 4 hour, right? So we have all the 4 hour zones, as you can see, showing here clearly. On the 15 minutes, also we can see that the market is also trending bearish on the 15 minutes. So we also need to identify the structure here so we can make informed decisions, right? So let me start by doing this. Should we go all the way back there? Well, we can, or we can take this last low. Let's just, let's not disturb ourselves or break ourselves so much or bother so much. So let's take this last low that was, that was created before the market pulled back and then took out effectively the last low or the previous low. So we're going to draw this. Okay, so we just draw that, and that's a break of structure in the 50 minutes. So we have that. So after that break of structure, where was the, the new low? What was the new low that was created? So here we have this. So I'm going to just draw this. And then you can see this sort of aligns with, of course, the 4 hour, the low of the 4 hour, that we just marked out not too long ago. So we're going to draw this now. So we have that. Now we have here, so we're going to draw the refined supply zone on the 15 minutes. So let's just take those. A second there. Okay, so 15 minutes. Okay, so our 15 minutes BOI, it's drawn. So now we need to, what do we need to do? So this is Sunday, of course, right? So we need to sort of take this, it's already Monday, so we need to take this to like 6:30, 6:45 a.m. ET plus 1 time, and then we can sort of analyze what we have going there. Well, before we do that, now after a major break of structure, you expect a pullback, and we already saw on the 4 hour that the pullback was already playing out. If you just go back there, so you can see that after this major break of structure, we had a pullback, and the pullback is playing out, right? So we know that it's a pullback. So even if we're going to trade a pullback, we have to be conscious that the market can continue in the major trend direction at any point in time. So you have to be super conservative with your targets. So now back to the 15 minutes. Okay, so on the 15 minutes here, after drawing our structure, we can see that the market started pulling back, and when the market started pulling back, we started getting, a sort of bullish order flow. Now, if you were looking at the market just on the 15 minutes, right, you may not necessarily capture the full picture of what is happening, and that's why you need to be able to analyze, the high time frame and the medium time frame for you to really get a picture of what is happening. If not, you'll be caught on the wrong side of the market. So here we have, just the bullish order flow. Clearly you can see high, low, high, swept all of this low, mitigated somewhere around here, and then pushed high again. So you can see the order flow clearly in place. So we have that, okay? And then what next? We also had this high, taken out, and then creating this low, and then this low took out this high. Okay, so now with this, we can also draw all of these zones. But now you need to be able to understand that this week we had CPI coming out. And when you have things like that, you'll be having situation. That's where the cliche buy the rumor, sell the news comes into play. So the market started buying ahead of CPI. Okay, so with CPI coming out, it's always a two-edged sword anyways. But if you follow that cliche of buy the rumor, sell the news, a number of times it works out. As a matter of fact, this month it worked out for NFP, the NFP or FOMC, I can't remember the exact one. But it worked out, the market was buying ahead of the news, and when the news came out, everything just tanked. So it usually works, So sometimes it can also help you to have an idea of where the market is going to go, and this will come, of course, with experience. And that is, of course, if you want to trade the news. You don't have to, but if you want to, yeah. Okay, so that is that. So let's take this now to so 6:30, 6:45. Cool. So here we are. So this is 6:45. Now we know that the market is trending bullish, but at any point in time that can automatically reverse. So we have to be conservative with our expectations. So we cannot just say, okay, because the market is trending bullish, we're just going to put an entry here and we're going to continue bullish order flow. It may work out, but a lot of times momentum may begin to slow down. So you have to really, be careful with that. So here we are. So this is 6:45 a.m. This is 6:45 a.m. So what we can do here is we can see that the market is sort of pulling back, hopefully to this area, and we can trade a continuation. But for me, I'll be very conservative with that because I know that it's sort of overextended. The pullback has really played out, and if you want to keep trading the pullback, you may be caught on the wrong side of the market. So I would need more information before I put, I enter any position. So I'll need more structure to see what we get. So 7:30 a.m. Okay, market. Let me just do this. So this high has been taken, right? And after this high was taken, what do you observe? The market swept all of this low and is pulling back essentially. So now, two things are important here. We know that the major trend of the market is bearish. So now after we've had this high swept, and now we have a change of character, a bearish change of character, because this low now has been taken. So we have a bearish change of character. Now you can be aggressive with your entry to say, okay, this means that the market is sort of reversing, and you may be correct, but at the same time you also may be wrong, because if you just want to trade the continuation based on the chalk, you may actually get it wrong. So sometimes you may need to wait for an additional confirmation. So you've seen the chalk, maybe you need to wait for the second internal break of structure before you consider going short, right? So aggressive approach would be to say, okay, I've seen this chalk, I'm going to put my stop above this area, and then I'm going to target, let's put 1 to 3. Now this is an aggressive approach, right? The more conservative approach is to wait for an additional break of structure, right, before you consider entry. So here we go. So London session, almost nothing happening, and then we'll come into New York session. So essentially that is it. So you can see that there was no trade. Price of course went on to hit our target, but then we had no trade during New York session, and that is it for today. Really, no trade on Monday. So we take this to Tuesday. Okay, 6:45. So here we are. We go again. So we now know that all of these areas here are reaction zones for price to react to. Okay. It doesn't necessarily mean the price will react to this and continue to push to the upside, and that's something you have to understand, because if you just trade in 15 minutes and you see this, you see, oh, this is super clear, bullish order flow, and I'm just going to enter and then trade the market in the bullish direction. But when you look at the 4-hour, then you understand that actually the market is not bullish. The market is actually, the major trend of the market is bearish, and with that you're very conservative in targeting, in entering your bullish positions, and you're more confident going short, because you know that the major trend of the market on the 4-hour is bearish. So with this now, let's see what we have here. So we can zoom in. So a few things, the market has officially changed from bullish to bearish, in my opinion, because you can see all of these previous lows that led to this bullish order flow, have essentially been taken out, right? So with that now, we can even decide to remove all of this. Let's take all of that out. Okay, so let's take this here. Just now. So we can see that the market is essentially now aligning with the bearish order flow. So what are we going to do? We're also going to draw a structure here. So this low essentially needs to go. That's the meaning, right? So we're coming into the market in the morning, and this is what we have. So we know that this low has to go. Now, where is price going to react to? Well, we have this here, right? We also do have this here. If you ask me, you can see all of this internal breaker structure. So let's draw this candle out. Right, so we draw that out, and then yeah, that is essentially it. So if the market is going to continue selling, two things: we're going to have either a sell-off here, okay, and then we'll target just 1 2 3, or just put our target there, and let's give this more room. Okay, so let's give this more room. This way, let's see. Okay, so let's give this more room. So two things: either price, because this is London open, and this things come with experience, so you know what price is likely to do. So this is London open. Price may either react to this area or may mitigate this area before selling off. So for me, this is what I'm gonna do. Right, 2 entries. If one fails, the other one hopefully should work. Right, so that is it. So let's see essentially what the market does. Okay, now of course I forgot to draw this. Let's draw the supply zone. There's also the possibility of price returning here, but because it's London open, I really wouldn't expect the price will pull back all the way here before selling off. And it's just something that you get to understand with time, with practice, with experience in the market. So this is London open. Let's see what happens. Ooh, look at that. Look at that. We got taken out. Look at that. Is there something else you'd have done here? I'm not sure. This was my supply zone. Well, you have this little pullback here, but there's literally nothing I could have done there as far as I'm concerned. Okay, so this is it. So London session, it's closing, and then we're coming into New York session. So for me, I'm still going to leave this in place, right? Because this low is yet to be taken out. Okay, and I'm confident that essentially that should go. So let's see what happens. Now, something you also need to understand is this: on Tuesday, can I remember? Let's see. On Tuesday, I think Tuesday was Tuesday CPI. Just a second, please. Yes, so Tuesday was essentially, yes, Tuesday was CPI. Okay, so now with CPI coming out, you have to be very, I would say, you have to be very sure, or you have to be very conservative in your target, in the sense that when CPI comes out, it's usually a two-edged sword. It could go both ways. It could go any direction. Sometimes you could even have a spike both ways and all of that. So if you're not in a position before the news comes out, it's best you stay off, right? And that is that. So CPI is coming out like 2:30. So let's see what we get here. So at most, we know that we're gonna have a short position. So we're gonna have that in place. So 1 2 3 for this too. So that's for London session. Sorry, for New York session. What am I doing? 1 2 3 here, please. Yes. So 1 2 3 here. So let's see what happens during New York session. Okay. So this is 12:30. So that's what we get. 1:30. Okay. That's 2. So you can see clearly that already that's 2 losses, right? So depending on what you're risking in a day, well, you can, of course, either end your trade here and then you're done for the day, or you take the plunge, right? So now this is it. So for us, this is 215, right? Most likely this candle would have triggered our trade already. So ahead of CPI, I wouldn't just allow, if I'm going to stay in the trade, I wouldn't just allow, that the market, what now? I wouldn't just allow that the market is going to just sell off in my direction. So I would either protect my position or leave the market. Now there's also something that happened here that I also need to highlight. Now whilst this, for example, I'm expecting short, in the live market I actually went with the long, okay, during London session. And the reason was simply because here you could see that we had here a bullish chalk. You can see this. So with this bullish chalk, and also with the concept of buy the rumor, sell the news, I was expecting that the market is actually going to buy ahead of CPI, and that was actually what happened. So essentially when the market came, we had a buy here, and then the buy, I wanted to hold the buy, funny enough, but then the market effectively sold off. And if you look at the forecast here, you can see that this forecast I had posted, I think this was a forecast, yes. So you could see that I had a buy position that I actually entered, and before CPI actually did come out, okay. And that was because of the concept of buy the rumor, sell the news. Anyways, that's that. So with that now, so this overview that we're going through, I didn't take short, but I'm showing this because the expectation is that with the order flow that we have, the market was going to go short. But with the knowledge of the fundamentals, excuse me, but with the knowledge of the fundamentals, I actually did take a long position in the live market. So anyways, CPI came out and the market sold off massively, and that was it. So that was the drop, right? So essentially, of course, if one was going short, those losses were covered. But in the live market, I went long because of my knowledge of fundamentals. You buy the rumor, you sell the news, essentially. And that was exactly what happened, and that was the trade of the day, right? As a matter of fact, I could say the trade of the week, the major trade of the week. And that was it for for Tuesday. So let's take this to Wednesday. What you're going to learn, so 6:30. Now what you're going to learn is the market, it's technical analysis, but it's also fundamental analysis. So sometimes you can be taking decisions based on your technicals, but you need to be able to understand the fundamentals for you to also make informed decision. Okay, so if you know the technicals, for example, we're taking all our short positions because we know that the technicals were showing us that the market is going to sell off, but our knowledge of fundamentals, on the other hand, would tell us that the market may continue to buy ahead of the news. Okay, so it really just happens. So you just buy the rumor, you sell the news. You buy the rumor, you sell the news. Sometimes you buy the rumor and you still buy the news anyways, but a lot of times you buy the rumor and then you sell the news, and that's what exactly happened. So when the market opened on Tuesday, in London session, we had the market was just buying and buying and buying ahead of CPI, and that was what eventually worked out. All right, so that is that for that. So now this is 6:30. So after a major break of structure like this, what do we expect? We expect a pullback, right? So now we have a new low here, and I'm also going to show you something here. So we have a new low there. Let's take this extreme supply. Let's just draw it out, right? To fulfill all righteousness. So we draw it out. So that's the extreme supply. If the market decides to pull back, it should pull back, not necessarily all the way there, because the market structure is still bearish, right? The high time frame market structure is still bearish. So if we're going long, we know that we're not going long with ambitious goals, right? We're very conservative with our target. So, but anyways, that's that. So we have that. Now the 15 minutes also, of course, we have this as our range. Now, a few things to point out here. When CPI came out, the numbers were good for the dollar, right? So when the numbers are good for the dollar, it simply means that, of course, the market will sell off on EU, right? Now, the day after, you will still have that continuation. Most likely, you still have that continuation of the sell setup, right? So with this now in mind, we know here you can see that the market pulled back all the way after, you know, CPI numbers pull back, low, high, swept this high, then we had the chalk. Now we're going to draw that out. So here, this high, liquidity sweep, and then here we have a bearish chalk. So you can see that. Now let's draw this candle, the zone, the supply zone there, that led to that chalk. So we can draw this, right? So with this now, essentially, let's focus on this, right? So with this now, you can see that the market basically is here as London was opening. Now, what do we expect? Well, a few things, right? We expect that the market is going to mitigate this, and then we get that continuation. Okay, so now you can also decide to say, I want to wait for extra confirmation before I go short, and that will be perfectly fine. But for me, I'm going to enter here. Okay, I'm going to enter here, and because I want to target 1 to 3, so my entry is just going to be at a point where I'm able to get that 1 to 3. Okay, so this would be my first entry, and this actually was my first entry. Let's see. I think I gave that was on what, Wednesday? Yes. So you can see this. So you can see this was my first entry. I'm already showing how he played out, but anyways, this was my first entry. Okay, so that was my first entry. So I was expecting the market is going to mitigate this area, and then we get a continuation, and I get my 1 to 3. So let's see what happened eventually. Now the market mitigated it, but did not get to my point of entry. Yes, exactly what happened. So this was what happened. So the market mitigated it, but you can see I wasn't tagged in, right? But then the market gave us something, and the market gave us what? A chalk. Look at that. You can take this white candle or this one, whichever one, but we had a bearish chalk essentially, right? This one not by the body, but we can take this one, and you see that it's by the body. But for me, this was sufficient for me to say that the market wants to sell off. Okay, and after this happened, this also provide a new area for us to enter. So with this, stops above this area, and again we'll target our 1 to 3 as usual. So that's that, right? So with this now, let's go. And that was it. Straight up. Okay, 1 to 3 and all. Now remember, this is why the knowledge of fundamentals is super important. Technical analysis is great, but fundamentals, when you combine your technical analysis and your fundamentals, then you have the best combo you can ever think about. Now, after a major break of structure, we expect a pullback. But because CPI numbers were good, London session still played, in the bearish direction, in the direction of the news that came out the day prior. Now, at any point in time, we're expecting that pullback to happen. Now, you can anticipate it for it to happen immediately, or you could wait. Now, after London session, let's just play this. So you could see that essentially price was now stalling. So price was not buying, was not selling, was just ranging. And then let's see what we got. Now, after a while, we essentially got, a chalk, right, that the market wanted to pull back. Now, a few things here. After this low was created, now this is still the highest point of this, right? This is still the highest point. This is still the supply zone. If the market is going to mitigate and then continue downwards, but we wouldn't expect that really, because CPI has played out, has given us a break of structure. London session has played out, has given us a bearish move, and then we're coming into New York session. Most likely, price may not continue to sell off. Okay, there has to be some sort of breather. Okay, so the market will sort of pull back. So with that in mind, now we have here low, high, low, high, low, high, and all of that, and then we have this chalk here, right? Now, if you're somebody who you understand fundamentals, you can decide based on this to actually enter the market and trade it back to the supply zone, because the market will hardly continue to sell after all of this consolidation and this ranging and all that. The market will hardly continue to sell. There has to be a breather for the market to pull back, of some in some ways. So we have this. So let's have this, and then 1 to 3 again. Let's put that there. Okay, and this is it. So because even if you're on the sell, you're gonna expect the market is gonna pull back all the way here, and so with that, let's go. Okay, so market was just doing its thing, and that was it, right? So you can see the market pull back all the way here. Now in the live market, I actually did also put a sell here, and that ended up as a loss, right? So I actually did also anticipate that, okay, if we're gonna have a sell, and this is what we call hedging, or what I call hedging, right? Other people may call it to the same thing, but I actually hedged my trade. And what I did was, okay, if the market is gonna sell off, right, then I should also be part of this trade. Now normally, of course, after this 2 successful trades, I'll be done, but yeah, it is what it is. So I just hedged it. If the market is going to sell off, then this trade should work out, and then I should get my 1 to 3. But eventually, of course, I was actually anticipating that the pullback was going to happen the day after, and which was going to be Thursday, but then it actually started during New York session, and you can see we're able to catch that. So with this now, we actually took a loss here. So anyways, and that was that. So that was also another loss, and that was the end of the day. So let's take this to Thursday. Okay, so here we go. Let's take that. Okay, so here we go. So this is Thursday. So what do we have now here? Clearly you can see we have breaker structure to the upside, right? We're expecting pullback. Officially the pullback is now in motion. We have this low here. Let's just draw this candle out. This is the demand zone that led to that high being taken. So essentially we have that. Now what do we have next? We also have this. So this should be the high that should go, the next high that should go based on the pullback now. So what are we interested in doing? We're interested in trading the pullback. So with this now, what do we have? So we have this area here. So we need to wait for this high to go before we can, consider going long, right? So yeah. So let's see. Okay. Good. So with this now, officially the market is now telling us that it's still wanting to go. The pullback's effectively in play. That's the meaning, right? So let's just zoom this out. So effectively after this major boss, right? So this is a major boss here. Let me just mark it appropriately. So essentially after this major boss, we expected the market is going to pull back, and effectively you can see that is happening right before our very eyes. Okay, so with this now we can anticipate to trade that pullback. So what do? Well, we draw our demand zone as always, just there, and then this is our demand zone. Okay, so with this now we can go. Now we know that this is unmitigated, and price of course will return to mitigated at any point in time, but with this now we can anticipate that, okay, price may return and give us an entry, and we just target our 1 to 3 as usual. Our entry just right there, and then our stop loss, and just move this here. So that's it. So if we get that pullback, then we'll get an entry hopefully. So let's see what happened. Yeah, painful day. So what do you observe here? Price came close, but then we had no entry, and this happens a lot of times. Okay, and I posted this also on the Discord channel because I had anticipated that this was actually going to play out, and that was on Thursday. So you can see this was a forecast. You can see this was my trade entry. Price came close but did not tag me in and left without me. One of those things that happened, and this of course was the structure, right? So that is that. So that happened. We got no entry, and that was it. Wipe our tears and anticipate that next is going to give us something. So that was it for the New York session. I was done trading for the day, and then so something happened. So essentially you can see, let me show you something here. So normally after 5 p.m. I'm not going to take any trade on the day. 5 p.m. it is plus 1 time. but I saw something and I knew that that was an opportunity. So here we had the sweep of liquidity, and then we had this bearish drop here, right? So with this now gave us a new supply. So yeah, so just before I went to bed, I decided to say, hey, what is that? Risk it, right? So I placed an entry here. My stop loss above that area, and then of course as usual, 1 2 3. So, and the thought, how I thought about this was, well, this is a clear, after, you know, the news came out, we had this bullish run, price has mitigated, has sort of filled all of this imbalance around here, and now we have a sweep of liquidity, a bearish shock, perfect setup for me to enter. And irrespective of the fact that, you know, it was past 5 p.m, when usually I wouldn't place any trade after 5 p.m, I decided, well, it was worth it, place the trade after all. What do you get to lose? Nothing. So anyways, I did that, and yeah, let's take this to Friday morning. And then when I woke up Friday morning, let's take this to 6:05. Yeah, 6:05. So when I woke up Friday morning already, the trade I had was already in. But also the market gave us something interesting. Now this created a new target for us, as you can see here. Now the question you ask yourself is, why are we considering going bearish and not bullish, right? And that's a very good question. And the answer is simple. The 4-hour structure is bearish. So the high time frame is very bearish. Because the high time frame is bearish, we haven't looked at that for a while. But because the high time frame is bearish, then you know that whatever bullish trade you're taking, it's not really in the direction of the major trend. So you have to be super conservative. Now, by the way, the 4-hour, the 4-hour previous low got taken out, so we didn't return here to draw that, and that now created a new supply zone here. So I'm going to draw that across. Okay, so a new supply zone for the 4-hour. So we have that. You'd observe that a lot of times, even during the week, once the 4-hour bias, major trend is set up, that is it. You know what to do. You know what to do. You know what to look out for. So you're not really stressing yourself, looking for things that really shouldn't matter. So at the end of the day, so price has returned to mitigate the 4-hour supply. So what are we expecting next? Well, we expect that this low is going to go, but the when, we have no idea. So this low may go, or, so let's just say this is where the money is at, right? Long term. But there's also something you need to understand. This area is still unmitigated. So even though this low should go, price may decide to return to mitigate this area before we get that bearish continuation. So you need to have that in mind. I'm very conservative in your target. So if you're entering the 4-hour, I'm just going to enter here and then target this low. Well, it may work out, but also you need to understand you have a lot of imbalance here. Price may return to mitigate that. So that is that. So let's go back to, yeah. So with this, I had one trade already playing out. So let me just draw that. Okay, so this was it. But then if you look at this price action, we now have a new low, right? A very conservative new low that we can target. But look at this, we also have here an internal chalk. Okay, so based on this, I had shared, in my forecast for Friday, the price will return to this area, and then we get that continuation. May return, not will return, but may return to that area, and then we get that continuation. Now you may say, okay, draw this candle as the new supply zone, but you also need to understand that price can sort of blow through it, tap into the area before it sells off rather. So you have to be super, you need to have that at the back of your mind. So with that now in place, let me also show you. So I shared this, this was what I was looking forward to, and that played out just perfectly. And so entry placed there, stop placed above this area, and then our target again, 1 2 3, right? Okay, so this was it. And I'm going to show you that actually I gave the forecast before it played out. So all of this is not hindsight analysis. No, it's real market, how everything played out. So London session price pulled all the way back. Not London session don't pull all the way back, just New York session price pulled all the way back, and then news came out. and that was it. So that was the drop that hit the target effectively, right? So I'm going to show you, so you can see here, this was Friday. So that's Friday roundup. No, Friday New York session forecast. So this was the forecast here. So you can see this was the forecast for New York session. So you can see New York session forecast. Price has mitigated the 4-hour supply. I'm not sure if that is too small for you. Sorry about that. I'm not sure how to increase this. It's actually okay. I think I can do this. Yes, great. So let's look at that. Why is it moving? Oh my, sorry. Anyways, hope you can see this. So price has mitigated the 4-hour swing supply zone, and we have both liquidity sweep. You see that? And also if there is chalk in place, you may go aggressive with a short or wait for additional confirmation before going short. If you wanted to wait for additional confirmation, well, you could have waited, but aggressive, you just go short because you've seen sweep of liquidity, chalk, and then price is returned to mitigate that, just go short. Okay, so that was a forecast I also posted during New York session, and then clearly you can see how it ended. The market played out perfectly as anticipated. Okay, so and that is effectively what we also took here. So this, ladies and gentlemen, are all the trades that played out this week, week 7 of 2024, and you could see that this is not just hindsight analysis, but actual trades that I took, actual trades that I also shared with the community, as you just saw in the Discord channel. So hey, that is it. I hope you've actually been able to pick a thing or two from this. Of course, if you've not joined the stocking profit course or the stocking profit program, it's not just a course. You have the program, you have the community, and the community is a lifetime access for now, right? So take advantage of it. You have the course, you have the community, you have the library of videos, all the forecast videos, all the roundup videos, weekly roundup videos, commentaries, Wednesday commentaries, back testing, and so much more. You have access to all of this large resource of information. So hey, take advantage of it. So of course, if you haven't hit the like button, hit the like button, and also subscribe and share this with other people who can also benefit from this. And of course, it helps with growing the channel. Okay, so but let's just do a quick analysis of all of the trades that we took. So let's start with Monday, Tuesday, Wednesday, Thursday, right, and then Friday. Okay, cool. So we have that. So this is end of week roundup. Now, by the way, this is really shared with the community alone, with those who are on the mentorship program. But here we have it. And what this was, what is the date again? This should be 12th. Am I correct? Yes, 12th to 16th of February. So let's go 12 to 16 Feb 2024. Yes. Right. So end of week roundup, and that is it. So Monday, what did we get? Well, this was Monday 11 a.m. So this did not work out. We didn't get anything here. We got here in the live market. Of course, it's different, but let's just take all of it because this is losses 1, 2, and then 3. So we got, let's say, Monday minus 1R minus 1R plus 3R, right? So that's that. And then Tuesday, what did we get? We got plus 3R. Sorry, Tuesday. So was that Tuesday? Sorry, Monday we had no trade. Tuesday was when we had that trade. So I'm gonna correct that. And then Wednesday we had plus 3 here and also plus 3 here and minus 1. So this will be 0 and this will be that. So we had plus 3 plus 3R minus 1R. Yes, that's for Wednesday. And then Tuesday we had also no trade, sadly came close, but then did not give us an entry. And then Friday we had plus 3R and another plus 3R. Was a sweet day. And then total, so the total RR will be what? Our total return will be minus 1 minus this is plus 1 on the day. So plus 1 plus 3, that's 4. 4 plus 3, that's 7. 7 minus, that's 6. 6 plus this, that is 9. 9 plus this, that is 12. So 12R, right? So that's plus, rather, plus 12R. So if we're risking 1% per trade, that would have given us 12%. If we're risking 0.5% per trade, that would have given us 6%. Okay, so that gives you an idea, of what essentially you would make trading that simple stocking profit strategy and targeting 1 to 3. Okay, like I mentioned in the live market, I didn't take these 2 losses because I had anticipated with knowledge fundamentals they're gonna have buy the rumor and they sell the news. So this will actually, I got a profitable trade here. But that's essentially it on how to look at the market. So I believe you actually learned a few things here. Technical analysis are great, but when you have the knowledge of the fundamentals, are you able to bring them together, then you have a mighty weapon in your arsenal. So hey, it's been a pleasure. Leave a comment, let me know what you think about this video. I hope it wasn't too long and you've been able to pick a thing or two from this. This is how we do it on Stocking Profit program, every week, every day of the week. So if you join the program, this is something you also have access to. You have access to forecasts. I may not necessarily show all the trade entries or give you this is exactly how you need to enter, but as you can see from the forecast, it's pretty much almost like me giving you everything, because when I tell you enter and sell from here, that's almost like giving everything. But of course, I don't want to be a signal, because you wouldn't grow that way. You have to be able to analyze and then of course compare your trade ideas with mine, and then that helps you to grow. So hey, ladies and gentlemen, that is it. I wish you all the best. Stay stuck in profit and see you some other time. Bye bye.